Big change is coming. President Trump is about to sign an order that could allow crypto, real estate, and private equity into your 401k. This opens the door to new opportunities, but also new risks. In this video, I will walk you through what's changing, why it matters, and what you need to know. Let's start with what's actually in this executive order. President Trump is expected to sign a new executive order today, August 7th at 12 p.m. Eastern Time. This would open door for alternative investments to be included in 401k retirement plans. This means assets like private equity, real estate, even cryptocurrencies could eventually become available as investment options inside your retirement account. According to Reuters, the order directs the Labor Secretary to coordinate with the SEC, the Securities and Exchange Commission, and the other federal agencies to make this change happen. The SEC is also expected to revise existing rules to ease the path for these type of investments. Bloomberg confirms that this move is meant to expand access to non-traditional assets, since typically only available to institutional or high net worth investors, by making them available to everyday savers through their 401ks. Now, let's talk about why it matters. For firms like Blackstone, KKR, and Apollo, this order could open the door to trillions of dollars from retirement savings, a huge new source of capital. For investors like you and me, it means more options like private equity, real estate, and crypto in our 401ks, offering greater diversification beyond stocks and bonds. But here is the flip side. These alternative assets often come with higher risk. They are less liquid, which means it could be harder to get your money out when you need it. They may not be as transparent, and they could be more volatile, especially in uncertain markets. While the upside potential is there, so is the potential for larger losses. This is one of those changes that sounds exciting, but it's important to really understand the trade-offs. Next, let's look at what this means for you and the broader market. For workers like you and me, it opens up a new world of investment possibilities. You will have greater flexibility to include things like private equity, real estate in your 401ks. This can mean more diversification and potentially higher returns. But this is important. You need to fully understand the risks involved. These alternative assets aren't as liquid or transparent as the traditional stocks and bonds. So make sure you do your homework before you dive in. For policymakers and regulators, this new approach presents a balancing act. They will need to encourage innovation and growth, while also protecting everyday investors from unnecessary risks. And for the financial industry, this change could be huge. It opens the door to a much bigger investor base, bringing private market investments into millions of retirement accounts across the country. This could reshape how people save for retirement and how asset managers do business. Now, with all this in mind, let's wrap it up. So, President Trump's order could bring alternative assets into your 401k, offering new opportunities, but also risks. Whether you prefer traditional funds or alternatives, the key is making choices that suit you. What would you choose, traditional or alternative? Let me know in the comments. And don't forget to subscribe for more clearer and practical financial insights. Thanks for watching, and see you next time. Have a good day.